and you might get some new stuff, right, that you haven't had the opportunity if you're newer to the Discord. But older guys that have been here, you should feel a little bit more comfortable with this stuff. And hopefully, you can ask questions in Discord or YouTube comments, and I'll try to get to them all. If I don't get to them all, then either message me here or ask Drew Catching Rockets, see if he can help you guys. But we'll get it answered one way or another. Okay, so let's go ahead and start. So what I want to start off first is kind of talk about the opening range and what we use here daily, right? So as you guys are familiar, we use the 30-minute range, opening range breakout. What that means is we find the high and the low of the first 30 minutes, and then basically we plot the targets to the upside and to the downside. So for instance, if you look at, let's start the day off here. This is our 30 minutes here. Let's see, then 20th. I'll just split the days up real quick so you guys can understand it. So this is the 2 days, right? So if you look at it, this is the 19th, this is the 20th. And all this means is that in terms of opening range is that opening range is basically your sentiment for the remainder of the day. It tells you how the trader.
We can't see anything yet.
All right, guys. Well, we'll go ahead and start. I'm sorry, just technical difficulties today. So as you guys, the opening range breakout is basically the sentiment. Old traders, when there was floor, but there was no automation between computers and whatnot, the speed came, the high frequency traders bought in. We did not have what we have today. Basically, it was floor, and the body language and the screaming, yelling of the other traders on the floor, they indicated what kind of day we were having, right? And basically, it was the 6 type of days that we identified in our Discord that you guys have. And if you have not read the book, it's also in the Pivot Boss book. So if you have not read the book Pivot Boss, I definitely suggest that you read it. I was not aware that it had everything kind of lined up in terms of days in that book, but it does. So it's identical to what we do in terms of the days and identifying the days. So that helps you with the opening range, because if you know what type of day it is, you can expect to know where the rejections, where the type of buyers will show up, if it's going to be responsible buyers or responsible sellers, initiative buyers or initiative sellers, so you know how to prepare for the trade. Do you buy on the low of the day or do you sell on the high of the day? Those are the type of things that we kind of identify using the ranges and the type of days. So if we go on our typical time frame, which is 3 days or 5 days, depending on how you trade. So here, if you look at it, this was our opening here. So this probably would have marked the low of the day for this day here. This was our low of the day. And then if you keep going at 10 o'clock, this would have set right here. This would have been our initial balance high or orb high. So if you kind of go here, this is our initial or opening range high, orb high. So then you can actually play multiple ways, right? You can play the opening range high, which is here. Whenever that breaks, go long. And as you guys know, we take the trades in increments, right? We have the 1272 targets, 1618, 2, the 2272, the 2618, and so on. But we take targets and we take profits at every one of those. As you go up, if you have multiple contracts, you're scaling out. You're not going to hit the one-time wonder and be like, oh man, I just made $100,000 off of one trade. That's not the goal. You'll never succeed. Okay. So I'll give you guys a visual now. I'll move to the right and I'll turn on the orbs that we use. So that way it's a little bit easier to kind of demonstrate what I'm showing here. So let me hide this. So if you guys look here, this was our initial balance high. I'll go in 5 minutes just to kind of condense the candles. So if you guys think about it, this was our initial high here, and that's at 10 o'clock. It shows up. The opening ranges will show up. So here's your orb high. Here's your orb 50, which is basically between orb high and orb low. And then we have the targets. We have the targets to the upside, and you have the targets to the downside. What we use in our Discord and what I teach is the confluence points, right? And there's multiple confluence points that you can use. First, you have the opening ranges, right? You have the orb high, the 50, and the orb low. You can use those. So that's one set of confluence points. Then you have the trend bar. You guys see the little line that's kind of dragging along. If the price breaks below that, you're definitely going to take that, and that's confluence number 1 or 2. So in this case, we can kind of cover the scenarios, right? Orb low was broken here, and it rejected the orb low. And those type of trades, you know, on a downtrending day or on a bearish day, like this one looked. So if you compare from the previous day, this was your high, and then it had the lower high and lower high again. So it's indicating that we're a little bit of still in a bearish trend, even though we're making higher lows. So that tells us we're still consolidating, right? So here, if you guys connected this, so it looked like a nice triangle, hence the consolidation. Lower highs plus higher lows equal consolidation. So here, you could have taken this trade multiple ways. You could have taken it on a rejection of the orb low, which is a little bit more riskier, knowing that it could also gain the momentum to bounce back to the top of the orb high. But these tend to be the highest reward type of plays. So we're looking to go on the retest of the orb lows or short, or if it gains the momentum and goes above it. If it goes above it and retest, then you're taking it long, and you know, the first target would be 50, and then the second target would be orb high. So far, I just covered 2 confluence points, which is your orbs, which is your trend bar, and then you have the VWAP. And I think majority of the traders here, you know, volume weighted average price, are familiar with the VWAP. The only thing that we do differently in the Discord is that we add the standard deviation around slightly different. So if you look at our VWAP here, it's not a single line. And in trading, there you should never use support and resistance as a single line. A lot of traders fail there. Like, for instance, they're like, oh, look, if I break 294.39, I'm going to go much higher, blah, blah, blah. But then, you know, if there's a little bit of price action to the left or right, like here, you might fail into the 20 cents trap, and then it reverses on you, and you're like, oh, crap. And then it touches again and explodes, and you're like, man, I had that position, but I got stopped out. And that's because people use the absolute support and resistance points, and that's what you want to avoid. Hence the reason why we have the VWAP with the standard deviation slightly together, and you'll see how well it reacts to it, you know, not only today and this day, but the more you use it, you guys will realize that cloud becomes really, really important, because sometimes it'll catch the bottom of the cloud and bounce up, or vice versa, right? So that's why we use the cloud. So the orbs plus the trend bar plus the VWAP, and then, you know, the fourth, and there's many more confluence points, is the trend lines. So in this case, right, we're below the VWAP, below the trend bar, we're rejecting the orb low here. So here you would have at least 4 things working in your way. Let's say here you wanted to take the trade below the 1272. So your 1272 is 1, trend bar rejection 2. And here, if you took the trade, you would have 3 points of confluences, and you take the trade short here. Once you take the trade short right here, let me kind of find these arrows. If you took the trade short here, your first exit is 2% orbs. And on Qs, if you drop from 289 to 288.64, a dollar drop would probably net you between 30 to 40%. And that's just the first fib level that you're looking to get out. Let me just remove this for a second. Then the second point is 2618, and you want to get out of that, right? And you trim there some more. And then you see how well it hits the trend bar, and then it continues down, and it hits the 326. And then if you have any runners, you leave it. And does anyone from the Discord know how do you use, once you get out of these fibs, what do you use to kind of stay or get out of the trade? Okay, we have some answers. So the trend bar is your best friend that you can have. And you guys will hear many of us in the Discord say, if it's below the trend bar, stay in the trade. There's no reason for you to get out of the trade until it kind of closes above it. So here it looked like a trap above it, but you probably would have gotten most of your contracts out by the 3236, and that's really, really extended, right? I mean, that's your 6th fib that it hit on the downside. I mean, that would have been great. If you shorted it off of the orb low, which occurred at 10:05, I mean, from 291 to 285, that's $6 drop. And that's pretty much easy money when you waited the first 30 minutes. You do not take a trade. You wait for the break to open range low or open range high. And once either one breaks, then you basically use the trend bar and you trim contracts as you go. You don't wait you know, you don't know where the last target or the bottom is. If you're trying to time the bottoms or the tops, you will not have chips to play in this game, guys. And then I'm just being honest with you, you're not going to succeed. You take your money, you take your 30% here, you take your 60, you take your 100, and then let's say if you have a runner and you'll see, you know, many times I played Tesla, you guys saw me last week. You know, I had 5 contracts, I trimmed a couple of them, and I kept one, and I made more on that one than I did on the other 4. I made about $7,000 on the last one because I just held it. You know, the points that we had, the idea, and the tactical analysis behind it, you know, agreed that they were going to go to 700s. And I think it ended up being from like 14, I think, no, 11.6. No, 14.6 to about, I think, 86 on Tesla. And that's just, you know, hey, I made so much money here. I'm just going to let one of these guys go, and I'll keep a trailing stop. If it breaks a certain point, I'll get out. But it never did. We just kept dipping, and you get out, close the position, and you did great. And, you know, your risk was low because you're already made up. It's almost like a risk-free trade for me at that point. And same here. If you have 5 contracts, you trim it. At each fit target, we trim the position. You trim, and then the trend bar is keeping you in a trade. Usually what I want to see on a trend bar, if you guys use the Ashi Candles, I want to see a candle close on Ashi Candles above the trend bar in order for me to get out. So if we use the Ashi Candle, guys, look where we would get out. So you got in here, your orb low was never broken into again, you know, to go about it. Your trend bar was never broken. You basically would have sold this at 135 here. So all the way from orb low of 291 to 282, you had multiple confluence points. You had the VWAP, trend bar, and orb low rejection. And then if you wanted to wait for this triangle to break here, let's say you got in here, I mean, still a really good reward, 289 to let's say 281. And if you kept your stop loss, let's say at the orb low a little bit higher, just to make sure, you can calculate your risk to make sure, you know, that your reward is not bad. So let's say if you got in here and this was your risk right here. So even if this was your final one, this is 1618. This risk here is fairly high. I would probably never do it that big in terms of a risk here. But here, even if you did this trade, this is 3-to-1 trade, and it's a great reward. But then if you drag it all the way to the bottom where, we would have gotten out, this becomes a 7.2 trade, and this is a banger, right? You're going to make a lot of money on this trade. Just even if you go to where you get out, it's almost 6-to-1. Now, when you couple this with what we do with the VPOCs, with divergent POCs and the POCs, it becomes really deadly. And a lot of you guys have gotten so comfortable, doing this that you identify basically the key levels of support and resistance. And a lot of times, and even recently, you guys have asked me, how do I find them on smaller time frames? How do you find the supply and demand? And honestly, it's fairly easy, and we'll cover it here in a bit. But I just want to cover something before that. Let's switch to Amazon. We'll go in 30 minutes. And I want to show you guys, I mean, even if, let's take the candles away. I'll take the candles away. I'll put what we do usually here, which is our VPSV, and then kind of let's just look at it, right? What does it mean, and how do we kind of find out, well, I don't know where the price is. I just know where the volume profiles are. And if you dump me anywhere on the chart, I'll be able to do the same thing over and over and over. So what I'm showing you here, guys, is the volume profile, session volume profile for each day. So each one of these boxes represents volume distribution at the price level, not at the time level, and how much of the volume has been traded. The red lines, the POCs, point to the highest volume traded at that price, called point of control. And if you add the V in front of it, which becomes divergent point of control, or aka VPOC, that means that level has not been retested. Without the candles, for me, it's difficult to know if it's been retested. But I can make some assumptions when I see a chart like this, when there's gap downs or when there's a larger impulsive, drop between POCs like this one and that one. I'm able to know, oh, okay, well, maybe this one is still a VPOC just because I know there's a big drop here. Some sellers came in. Let's see if it works. Does everybody understand just in real life the supply and demand? And if you don't, that's okay. Just say no, and I'll give you an example. It looks like we got economists
No.
in our group. So the simple rule of supply and demand, and if you think about it, you can apply this to your to your life and anything that you do, from housing to, yes, PlayStation to shoes, whatever. And I've given you guys many examples. When the supply of a product or stock is high and demand is low, what's going to happen to the price?
Price is going to go down.
Price is going to go down. When the demand for product is high and supply is low, what happens?
Price is going to increase.
Exactly. And the most recent example you have is what? That you use every day. Okay, Dempster, don't answer anymore.
Ooh.
Yes. Yes.
Yes, guys. It's a scarcity product right now. I mean, it's, the supply. I don't know if the supply changed, and the supply doesn't have to change, but the supply provided stayed constant. Quantity demanded increased, meaning what's happening in the recent employment is all the offices are saying what? Oh, come back to work. COVID's gone. Well, if everybody's going to work, what happens to the gas station? People are going to be filling up more because they're no longer working from home. So the demand increased, supply stayed the same. So now they're going to jack the price up, knowing what's going on in the world with the wars and whatnot. So the price goes up. I will leave this as a homework for you, just a question. What do you guys think will happen to the housing market 20 to 30 years from now? If somebody has a good idea and can answer now, you can answer. But you have to think about this in terms of longer investments. If you're a real estate investor, the biggest factor in the housing is, believe it or not, it's your birth rates. If you have not read Demographic Cliff book, I'd strongly suggest that you do. It will teach you a few things about how the waves of birth rates and demographics change the economics, right? So if the birth rate is super low right now, what is going to happen to the demand 20 years from now when the kids become out of college, or 20, 30 years, and they become relevant in the calculation of the GDP? So think about that, because a lot of people are like, yes, buy the housing market. My housing market is going to continue to grow, but you have to time it now and plan for it, 10, 20 years from now. Because if the birth rate is low now, and when these babies come out, they're not going to need as many houses, guys. So that's an example of supply and demand and how they plan against it, right? And same thing, when you think about, certain stocks that ran wild lately is Peloton. I always believed it was a $10 stock that it never deserved to even be public, but they had a perfect timing, perfect supply and demand happened for them, and they exploded. And now, there's some new viruses, monkeypox or whatever it's called, and everybody's looking at Zoom, everybody's looking at Peloton, and it's just the cycle repeats itself, right? Because in case we get another shutdown, those stocks again will get a look, and people are going to start doing what? They're going to start buying the stock, and then people that have them, they're not going to be looking to sell, and then the price will eventually kind of increase a little bit more. And the same happens in every stock and every time frame. Okay, so how do we find the demands and supply zones? The easiest way that we've covered it before, and what we do is we use the session volume. So if you click on indicators, you click on technicals, then you click on volume profile, there's something called session volume profile, and that's what this will kind of give you here, these little boxes with the POCs. And if you click on this, and these are my settings, you guys can replicate the same ones. Mine are set at 68 and 100. Usually I change this one to about 75, but something reset. So I would change this to 75. So 68 is my volume, and that's because of the standard deviation. And then the 75 is the row side, so I can see a little bit more volume bars or sessions to the left. So with that being said, then what I do is, without candles here, I'm able to kind of gauge with no bias where are the supply and demand zones. So we use 30 minutes to find the POCs. And if you're on Thinkorswim, we also have a study in our Discord that we shared with all the members. Then we kind of look at the standard deviation around the POC to make sure that we are grabbing kind of evenly around the POC. Does that make sense for everyone? I'm just looking for a normal distribution of volume to make sure I find this. and just stay with me. I'll get back to the basics. I just want to make sure that you guys understand how do we find the supply and demand, and how does it play a role with the orbs, right? So that's where I'm kind of leading you to right now. So if we go here, you have the first day, here, this is after the earning drop, second, third, fourth, fifth. So this looks to be a nice gap in between here. So if you guys look, this seems to be, hey, we sold a lot, and then here's another zone that I'll be looking, to kind of draw my demand around. So this would be one of them. So we have that one there. And then on the bottom, you have this guy here that will act as demand. And usually I color code these, but I'm not going to do that now just for the time purpose. And whenever you have something like this, when you have two POCs lined up, in this case, you have three POCs lined up in a very critical level here. You guys see that, right? So this, whenever you have three or more or two POCs lined up, that becomes, if the price is below it, that becomes a really, really strong supply zone. And we just covered the definition of the supply. When something comes into the supply, that means they're going to kind of initiate the selling of it so that, they can offload their shares to somebody else. Let's see here. So if we draw this here, and usually what I do is I try to capture somewhere around here. I would capture this close enough. And then on the bottom here, what did I do here? Let me change this to 100. On the bottom here, so here you will have a 2x POC, and this range here is going to be, I don't know why this one only changed, but okay. This becomes your mini kind of supply zone. So far we've identified, your supply, your demand, supply here, demand, dependent. I know where approximately price is. It was around 2100, so I'm able to say which one's supply, which one's demand. And then here's another POC that's kind of out there. It could be a VPOC, we don't know. So let's see, if I turn on the candles now, let's see how we did, right? So here, the distribution of volume is probably somewhere around there, because the 68% of volume goes all the way to the bottom here. Most of the time I would grab that. I've been grabbing 35% as a rule, just to see how it plays out, kind of testing that. But here you go. So here's our initial supply, which was your VPOC here. Came back, retested it, and it failed. Then it retested it again with a lower high. You guys see that it never made it to this level here. So this is a lower high. And then we had the major sell-off start. Not only in Amazon, but the whole market started crashing down, right? And here you go. There was a POC developed here, kind of crushed through it. Then here's another POC that acted as a strong supply here. And we drew that one earlier just based on this impulse wave. After an impulse wave like this, or impulse selling, you usually get a little bit of consolidation. You'll get a pop, and then you get another, dip below that area, retest, continue down. And you guys know, usually what happens here in this area is when you have a strong seller, and remember, these guys that are selling, they're not selling 5 shares of Amazon here. Sometimes they're selling, if you guys saw the dark pools lately, they're buying and selling upward of 10,000 shares of Amazon, at $3,000 or $2,300 a pop. That becomes a lot of money. So they have to find buyers at those large quantities. And it's not so easy finding, when you're selling in billions of dollars, it's not so easy to find somebody who's going to buy it here. So what they have to do is, instead of selling 10,000 shares at once, what they will do is they'll say, hey, I'm going to fill, 30% of my position here. And then eventually price will come to my level. And what am I going to do here again? Well, I'll unload the rest. I'll take out the rest of my position on Amazon, and I'll switch here. So the dark pools, the private networks where all these, the big boys play, is they do it so that way they hide their intention, and also to make sure that they don't trigger the price, to go up or down. Because if, in the middle of the day you saw, a volume spike of, 10,000, 15,000 shares at one spot, a lot of buyers or, sellers would be like, oh man, we got a big whale coming in, let's go in, follow them. So that's why they use the dark pools, the private exchanges, so that way they go kind of unnoticed and they're able to hide it from the retailers, right? So they hide the intention and you're kind of still in blind. But the price and the volume profiles that we do kind of expose them a little bit, even though none of these catch the dark pool levels. But we are able to kind of tell, hey, based on this, we know that you're offloading the shares here. And every time it comes to it for a little bit, it's going to be critical that we know that you might short it. But if you break this level, it's going to be kind of like a change of character. The first change of character for Amazon is probably around 2350. Once you get above it, then there's a strong chance you're going to go to 2500. And at 2500, we know that there was a seller that was fairly aggressive here, even though declining volume here on this day, the second tap. But somebody wanted to lower the Amazon stock so they can load up because the stock split's coming. So there's a lot of fundamental knowledge, also analysis that are coming into play on Amazon. And a few other big boys are doing splits, Shop, Tesla, Google. So it could be that they're loading up. Drop them all you can, and then they're going to load up again. And that's, I think, potentially what's happening here lately on Amazon. So now, how do you, play this multiple ways, knowing right what we know? So we know that there's a demand here. It's basically the simple rule that we know of, let's see here. We know, so if I was to type this, higher high plus higher low equals what? It's always going to be a bullish trend. Lower high plus lower low is bearish trend. Any other combo, maybe if I learn to type, is consolidation. And it's simple as that. So, if you have lower highs plus higher lows, this is consolidation. You connect the top and bottoms, and usually you will get a triangle of some sort. So let me kind of move this here. So here, if you take a look at it, right? So most people, if they kind of connected this, if you're connecting the lows here, right? So there's your lower high, here's your lower high. I mean, it depends where you connect at that point in time. I'm just doing it now post the action. Lower high, lower high, lower high. So now, whenever this breaks, and usually you want to take out the previous structure, like this one here, if you're playing this down and you want it to go up, some people will play it here on the break of this. Let me kind of zoom in for the people on YouTube. So if this candle was broken, you can go long on it, and that would have worked well, right? So if you took it here, I mean, it ran pretty wild all the way to 2200. So that was a good point. And we had a supply zone, and that was a good level for you to get out, knowing that previous supply zone there rejected as well, like right here with this bearish piercing candle. Then here you have an indecision candle forming. So it was a good way to get out of these trades, but you had good entries. You broke the previous lower high, you got in, and then you could have played the retest too. If you play the retest here at 2136, all the way to 2170, you probably make some money on Amazon. And then you see, it reclaimed that level, right? It reclaimed that resistance, and then it was able to go to the next one. The new seller showed up, or existing seller from the initials kind of took over and started selling back down, and it was much stronger than the buyers that happened to be here, and they were just overwhelming them and kind of selling more than they can buy. And here you go. Then we brought it back to this demand where more buyers showed up. They're probably thinking, hey, now, this is a good value area for us. We're going to start buying at 2100. And if you guys look at the longer picture of VPVR, you guys will see that there's a big shelf around 2000 on Amazon. And I would not be shocked if we dip below the recent 2050 low and go to 2000 and then continue going up and kind of trend reverse from there. But that's just a prediction. It's not something that will happen, right? That's just me predicting what Amazon stock might do. So far, does everybody understand what we've covered here in terms of lower highs, higher lows? And now we're going to go into how do you put it together into, into trading. Okay. So let's cover this. Let's turn on the orbs for a second. I'll just remove some of these clouds so they don't confuse us. Okay. So now we have, right, so if you think about this, if you have a confluence point let's say that if this cloud was at orb high, I'm just giving you an idea. If this cloud was here, right, this becomes your another confluence point. And we get this a lot in our trading. When we trade, we get this a ton, where our VPOCs and POCs line up with the key levels of orb high or 1618 or 1272. I just shifted it down to kind of demonstrate. So now if I was looking at this, and this was the case on Amazon, that this 2196, and usually, you know, the law of even numbers. So let's say 2200 was the level. Well, I know previously rejected it here, and it's approaching this level, you know, from the open at 1045. It's hitting the orb high once, twice, 3 times it's hitting, and I'm unable to break it. For me, it's telling me that, you know, the auction keeps failing. That means somebody's saying, hey, anyone want to take Amazon 2000? Anyone want to take Amazon 2000? Everybody's saying, no, not willing to take 2000. That means what they have to do based on the definition earlier that I gave you. When the supply of a product is high and demand is low, what happens?
Bring the price down.
The price has to go down. And think about all those, you know, the fast auctions that happen. They spit out the price so fast. And think about these computers. They're like, Amazon, 2000, 2000, nobody. Amazon, 2100, 2195, 2190, 90, okay, nothing. 2180, 80, and you see how quickly it starts dropping. And then it catches a little bit of buyers. Somebody's like, hey, 2145. Oh, okay. Somebody raised their hand and they get the price up. And that's literally how the auctioning works, right? It's just a little bit faster with the computers. The algos, you know, they account probably about 80% of the trading volume on the stock market. So the 20% is, you know, not only retail, but there's other investors and hedge funds, smaller or bigger, that make up probably another 10%. And then you have some other big players make up 5%, and then you know, us retailers, the broke people, we make up tiny little circle of 5%. So for us, we cannot move the price. What we need to do is you need to react to the price instead of, you know, if you start predicting, and sometimes it's okay to kind of predict what could be the move, but you got to have the move prediction for the upside and move prediction to the downside, so that way you're not being biased and it's like, hey man, like I know this is going to go up. This is my idea. And if, you know, as a human, your idea doesn't work, usually what happens to people is that, you know, they don't want to let go of that trade. So if you don't let go of that trade, usually that means your account's going to bleed and you start hoping. And once you start hoping and trading, that psychology does not work. And many of you probably have learned, you know, if you don't have a stop loss, if you don't have a planned trade, and you don't have a stop loss, where you're going to get out, where you're going to get in, those trades are just lucky. And eventually the market will teach you that luck runs only so far. You got to earn it. You got to know where you're going to get in. You got to know where you're going to get out. So for instance, now we had, let's say that resistance there was, you know, 2196. If you know, this is almost like a triple top now, and you see the volume is picking up on a selling, right? So here, these candles on the volume are much stronger than the buying volume on the previous candles here. So it's indicating next time it hits here, it would not be a bad idea to short. And then you add the naked trading part to it. So I'll just remove the orbs for a second. For you guys, I will mark this here as the orb high for a second. Let's see, this is our orb high. So we'll remove that. I'll just remove all the lines so that way it's easier to see. And I'll switch to Ashi's for the visual perspective of it. So now you have a, you know, here you had a higher high, then you have a lower high, and here's a higher high, then you have a lower high. So from long perspective here, you had the opportunity to go long here and you get out here. So that's fair, right? But now the new day started. Here we are at 9:30. We have a higher high, lower high, and we are unable to take out a new high and create it here. But you're making higher lows. So a lot of people, you know, would say that this is an ascending triangle. Definitely not. You're still in a bearish mode when you take out and zoom out on bigger picture. This is nowhere to be, you know, a triangle right here. So this is not a triangle. It's just kind of like a bear flag. So let me go back. So now all I'm doing is I'm taking the, you know, the lows. So this was our kind of equal lows here, low, low. This is our higher low, higher low, higher low. I'm connecting those lows, and I'm just going to play the break of them. And if I just remove everything right now, and I just go regular candles, and this becomes so easy, guys. And it becomes super, super easy for you guys to start making money in the market. But you have to be disciplined. So here's your, equal lows here. 1, 2. You have this one. You have this one. And then you see that there was a kind of like a consolidation here anyways. You have to pay attention to some bigger picture in the chart. So all you're playing is the break of the lows. Many traders, your entry can be here on the break of this trend line. Who knows where's the second best entry here?
The retest on the second candle right there?
Which second candle? This one here?
Yes.
Okay, that you could use that. Professionally, you want to play it right here. You want to take out this candle here, which is your previous lower, higher low. So when it breaks this lower high, you can short it there, and your stop loss becomes kind of right around here. So here you would have about probably $3, risk, and you would have the reward all the way to the bottom of 21.43. So if you think about this position, your entries here, your stop loss would be right here, and your target is the previous low here. Look at the reward on this trade.
Yep.
It's 7-to-1 trade, and all you can do as a trader is plan a trade. You're seeing something that's happening, right? You're seeing kind of like a rising wedge being formed here. If you look at it, right? So here you see a rising wedge being formed. You're having higher lows, and here you started having equal highs or lower highs at this point here between these two. And then we're playing the break of the trend line. You can get in here, and you will put your stop loss right above these recent highs, right? So if you played it this way, you would have gotten it here, and your stop loss would have been here. Your target would have been, first one is right here, which is not the best trade. The second entry would be 257, which is not bad. So for me, this is a little bit of a riskier trade than the other one that we have below. So for me, this is better for me to wait for the break of this previous higher low, and then put a stop loss right above these wicks somewhere. Like you don't want to put it so obvious where they can kind of get you out of it if they go stop hunting, so you're quickly out. So here, if you took that trade, that's a hell of a trade. 6-to-1, man, you take that any time of the day, right? And then you see that we literally get a stop. So if I was to grab these candles here, this is, you see where we bounced? It becomes your level of a bounce. And then what happens? Look at this. They continued this. They continued down, right? They continued even more down. So if you had any runners, these would have printed. And then they reclaimed this, and they tried to close on that crazy run they had. And the same thing you could have played again, right? So for instance, if we are going on still on 5 minutes, these are your lower highs. So this was your higher high. Well, let me show you this. You guys all have this. So here's your, here's your higher high. Here's your lower high, another lower high, lower low, lower low. Earlier we covered what is the definition, right? Lower highs plus lower low is bearish. So you're still in bearish trend. You have the lower highs and lower lows. Now you're connecting your tops. Let's say you're connecting these tops here. So you have these tops connected. On the break of this, you can go long. And look here, your first target should be the previous lower high. And look right here. If you took this trade right here on the break of this, right? So you probably won at 21.09. I mean, all the way to 21.26 at 2 o'clock on Amazon. You guys know you can make some money on the option side of Amazon right here. And you get out there. And then this becomes your resistance, obviously. You see here that it's hitting the resistance. It's almost like it created a little consolidation zone right here. And look at that. It hit, bottom, top, hit. Once it breaks the zone, it's time to go. And then the previous resistance right here that you saw right here on this level is what now? This is your, if you're getting in here to go long, this is your exit. You're exiting here, and psychologically, right? We know some of the max pains that they have. They had to close Amazon, above 21.50 just because of the losses the market makers would have incurred if they kept it below it. And what did they do? They closed it right above it. So all those puts, 21.50s, they go worthless. Is this making sense? Let me check YouTube just to make sure there's questions there. How do I find it now? Okay, I just answered that. So on YouTube, you guys have any questions, or Discord, do you guys have any questions regarding what we covered so far? Okay. All right. So this is just an example, right, on how you can use this. When I start teaching or mentoring people, this is pretty much let me go to SPY. I'm going to remove all of this. And it's, I personally would not use anything below 3 minutes if I was you guys, if I was playing the market, just because you're going to get a lot of fake outs. And for newer people, you can switch to Ashi Candles and connect your lows and highs and play off of that. So for instance, right, how do you determine the supply and demand zones of 3 minutes, right? So for me personally, I look for the reversal candles. As you guys know, usually I look for imbalanced candles, but there's multiple ways, right? So one of them is volume profile intraday. You can look at that and see kind of how are you doing on the volume. So here, you can tell once you break this area here, the next logical support would be here between the gap areas, and you see how well it bounced. You broke probably intraday POC. If I was to go back in time, you broke this and you went to the little gap area. That's one way, right, to determine the areas. And you have yesterday's POC lined up right here at the 389.96, and pretty much that's where we closed the day or rejected right on there. And usually when you're trading volume profile, just an advice for you guys, if you're only looking at today's POC, that's not enough. You also want to be aware of the previous day volume profile, because this is aggregating as of today. This becomes support and resistance for the next day. So that's why it's always crucial that you look back on the previous day and pay attention to it, how the volume is being put together. So that's why a lot of people, especially in Thinkorswim, the way they aggregate volume profile in Thinkorswim is much different the way they aggregate in TradingView. You do not want to use today's POC in Thinkorswim. If you're using it successfully, continue doing so. You figured something out, but I don't suggest that you do. Okay, it's not the best thing to do because the way the aggregation periods are calculated and the way they put it together is different. So always look at the previous day POC as well, because it will help you. Okay, now if I take off the volume profile here, you look for areas of congestion, right? So if I was to look for areas of congestion, let's say for this right here. So this becomes a really nice area of congestion. Let me kind of take away the extensions here. So you guys see here, this becomes a nice little area of congestion, right? And then there's another one right below it. And look now, if I take this and I drag it all the way, look what happens here. You come here, you reject it on the downside once. You come again to the top side, you reject it. Excuse me, once you're able to break this, then you're going to visit the previous rejection points here. So here, if you came back and you retested it, and you really did not kind of play a big role in this box here, but you probably should have taken some profits here. And then once it broke, look where it hit. It went to the previous zone here and it rejected. So now couple this with what you know in terms of connecting lower highs and higher lows. And this is the simplest trading you're going to apply and make money on. You look for areas of congestion and you play the breaks. So for instance, let's look at this right now. So if you just take this, okay, so we know, let me turn this on and let me change this to 11. Let's change it to 3. Okay, I just put a lot more of these so you guys can see it. And you guys see here, this here made a higher high compared to the previous one, but overall, lower highs all around and lower lows. Does everybody agree? So we know we're in a bearish trend, like fairly bearish trend. And if you look at this, what does this become now? Let me just kind of find, well, let me do this. As you guys know, I'm kind of picky on on the parallel lines. Okay, so now you have a nice down channel, right? If you're in a nice down channel, you're looking for the break, but you only take this trade once it takes, over the previous lower high. You do not want to take it otherwise, at least I don't. So the true change of character, if you look at it on 5 minutes, happens where? It honestly will happen where you had the last consolidation zone here, which was nice level right here, 384.94 was your trigger to go long on SPY. So this level here was your zone, and look at this. This zone here was kind of like a trapeze zone, right? It really did not do much. They consolidated a little bit, they created a couple of bear flags, and then it continued down. And you guys see that. But then this is where the character changes. 385 psychologically, it's a big number. 380 also is psychologically big. Oh, we bounced at 380.5. I would have won the bet. Whoever bet with me, we had a side bet that I told you guys it was going to bounce at 380.50. Does anyone remember that? That's interesting. I didn't even look at the charts much past the time I logged off. Okay, well, good. So here, this would be your trigger to go long. And then, if you're going to take profits, the previous lower high is your first target. Then the previous other lower high would be your second, but you had a zone here. So you want to make sure you get out, top and the bottom of this zone. So this is your consolidation. Think of this as a cloud, and you guys know we do not trade inside the cloud. You do not trade here, and you guys know why. Because that is your zone where the data is being eaten away. That's where the balance occurs. So if you think about supply and demand, people are happy in this box. When people are unhappy to a downside, that means the supply is given and the initiative, what's their name? Take over. Does anyone know the type of buyers, sellers? So here, your initiative sellers are taking over, and they basically drive the price down. Then they find a new value area where they're like, okay, man, it looks like we're happy here. And then they're like, never mind, we're not happy here. We want it lower. Then they're like, hey, guys, we're happy again. And then they're like, nope, we're down over. And how can you determine, where does it go to? Does anyone have an idea? How would you know your targets here? Does anyone have any idea?
I have ideas.
Let's see somebody else's ideas, not yours. I know you have ideas because I've covered this.
Okay.
Or dumpster fire. You're not allowed to have ideas.
That huge green volume bar down on the left right there, Shorty?
This one here?
Yeah, a zone, right up under, right there, like kind of up.
So let's do this. He's right. So this is on the chart that we see prior to this drop. This was our recent low. I'll grab this to the recent highs here. And let's see what the fibs say. As you guys know, these are the only fibs, at least that I care, and I would say majority of our Discord cares. It's 50, 61.8, 1618, and 1272. The rest of the fibs might be important, but not to me. They play zero relevance in my life, and and Fibonacci's ratios, they're not so important. A lot of people, you guys will see, they pretty much trigger every one of these, and then they post, oh, my fibs hit, and it's like, hold on, I will in a second, but hold on one second. If I do all this, well, then I can also say all of my fibs hit. Every single fib that you see is touching. 786 is touching, the 386 is touching. Sure, you can use them. It just kind of gives you a little bit of less range to play and trust. And now I have to uncheck all these. So let's see, all of these get unchecked. So I only use 4. You can use any like 2618. You can add that one. But these are pretty much the ones that I care about. Hold on, man. So far, if you took this, right, it tells you the 61.8 is going to be a major resistance. And how do we know, guys? I mean, just pay attention what it's doing. 1, and then let's see here. 2. Look at this right here. I mean, look at this dance. I mean, this is nasty here. a bunch of indecision candles hitting here, and then you have the 50% that's also hit. 50% is not a fib ratio, but a lot of traders use 50 and 100%. I always keep 50 just so I know how others might react to it. Okay, so now if you know these levels where it might go, on the first drop, when it broke this consolidation box, aka bear flag, so your bear flag is here. If you look at this, and even if you took it from here, if you took it from here, this is your bear flag. So you have one bear flag here. Your first exit is 1272, guys. So take a look at this. If you took it here, your first exit is 1272. What should be your stop loss in this trade here? You're taking this bear flag. What should be your stop loss?
The 618 resistance.
No, 618 resistance. No reason not to go. Usually what I do is I put it a little bit higher, so that way in case they want to stop hunt, I put it somewhere like right in the middle. And now look at this. Do you guys want to take this trade? It sounds crazy, guys. These things happen in trending days, and you guys know it happens. 51 risk to reward. Even if you increase this, your risk to 5-1, this is 6-1 trade, guys. That's our first exit, is the one. But then look at the bottom. Does it hit perfectly on the fib right here and bounces? That's almost 9-1 risk to reward, guys. And it's perfect tag. You're right. You can use previous lower high as well as your stop loss. Usually you want to use it slightly above the previous stop loss because they can come and tap that level. And you can, no, this one right here was not an error. This was not an error. Does anyone know what happened here? Here, I'll give you guys a clue what happened. Now watch what happened here. Maybe this recalculated, but in our pre-watch list in the morning, what did I say? Where was it going to reject? Did I say the weekly bottom was right here and then there's a strong rejection coming at 396.9? You guys recall that? So this was your weekly bottom cloud. It means it's going to hit the cloud and come back down really, really hard. So no, this was not. This was just a push-up. So if you look at your 1 minute candle, there you go. It pushed up and it got rejected. So there was nothing wrong with it. Does it make sense? And then if you keep going down, right, this becomes just a patience game. Here's one bear flag that you took. Here's a second bear flag that you took. Third. Fourth. And then if you guys recall, in the middle of the day around 1:30, I told you guys you should start looking for calls and be prepped for calls. Does anyone recall that? I can find it in the chat when I typed it for you guys, because we were getting a little bit overextended. And if you use the fibs, you would have known that soon we're going to get a kind of rush over, right? That we're going to be pushing over. And then you're looking kind of, usually when I look for a change of character, I go back to 15 minutes and I look for the reversal kind of highs, right? So for me, this was a reversal high here, the 385. Once that broke, it was time to go. And I mean, if you play that, if you play this reversal here, I mean, you would have gained 5 points. And we usually play SPX in the Discord. Some people play SPY. I think on SPX there was some runners. I did not play any because I made some decent money in the during the day. But on SPX, if you play this, I'm not exaggerating, you probably could have made on one contract a couple of $1,000. How did I find the reversal? So I'm just looking at lower highs, right? So if I was to kind of look at it, I switched 15 minutes to find the change of character. Where does the stock change the character for the day? So here, is your higher high, lower high, lower high, lower high. So your last lower high here, you just mark them, right? So it would be this one, maybe this one, be this one, and then here it has this one here as well. You could have taken that when it went long over that, but you had to be, quick taking profits the whole day. You had to be. Then here it gave you that look of a bear flag. It's not an ascending triangle. It gave you a bear look, and then it kind of kept picking up. And even if you go in 5 minutes, you pay attention to the volume, right? What are you seeing on the volume here? All day it was reddish volume up until here. Then you see, a little bit of green volume coming in, red volume is not as heavy. And then here, off of the trend line, you see green volume decreasing, red volume here, telling you that, the bears are a little bit exhausted. And then you're watching, okay, well, this is a level, right? This is where you had the last consolidation zone that was pretty good. And a change of character happens right here. Sorry, I missed it. And now you're able to trade that. And then another entry you could have done is if you connected the recent highs here, watch this. You connected this, look, it broke. And what do we say about the trend line breaks? Does anyone know? Do you take the first break or what do you do?
Wait for it to retest.
You actually wait for the retest. You don't want to take this first one because that move is not going to be great. If you waited for the retest, it paid you. Then you knew, if you did this, then your first exit is where? It's right here. You want to get out here. You want to keep some rest there. Then your first level, second level is here. And then the third level would be the consolidation zone right here, which is this candle right here. And look how that worked. So if you would have gotten it here at 382, 384, 387, and 389. So that, it plays beautifully. If you play this spike during power hour, which strike would you? Usually, if you're playing 0 DTE, right? Those are, you want to play closest in the money or in the money as you can, because the theta on everything else is just going to burn. Even if you're one strike out and one single candle goes. Remember, some of these machines are predetermined to go to a certain point where the max pain or max loss for market makers is set. So that's how they play. They have certain levels where they have to close. Seems like they needed to close at about 385. So if you look at this, let's look at daily position. I think it might be on still. I don't know if this recalculated what sequence did, but it tells you, it would tell us how much money was at each one of these, and then which strikes they're going to be targeting. So if I was getting in here and 382 was my entry, what would you guys play? What calls would you play? At 3 o'clock, 3:10, you want to play close to the money as possible in 0 DTs. If you know that, let's say this was a Monday and you're buying Wednesday calls, or let's say Tuesday calls, then, you can buy $2, $3 out. If you see that, you manage your stop loss, maybe low of the day. So if this was your long entry right here, and then let's say the low of the day is here, then, your first entry, if it's here, it's 1-to-1 trade. The second peak would be here, and that'd be 2-to-1 trade, which is not bad. And then the final would be you're here, which would be 3-to-1, and that's what you want. So if you got in here, your target's here. So if you bought 385s, they would have been in the money. And then if you bought some 390s for that week, they probably would have appreciated a lot more in value than the 385s. You probably would have gotten these. I don't even know if somebody has toss up. But at 310, check the value of the 300 contracts or 390s on SPY. They were probably, I would say, pennies. I would say they're probably worth nothing. And that probably went, I would say, 1,000%. If you play 390s from here to here, they probably went 1,000 or more. And, you don't have to hold it all the way down. You take it out as you go, first level, second, third. And then, if you're not familiar with how to find these targets, then you can always use fibs. This is your low, this is your high. And then you basically play the levels. Look, your 61.8 here is your first level of resistance. The second resistance is your 50%, and it worked beautifully as well. So it had the wick here, and it had identical wick here as well, right on it. So if you grab the fibs from low to high, if you grab them from low to high, you're looking for resistance points. If you're grabbing them, I'm sorry, I grabbed the wrong thing. If you're grabbing from high to low, you're looking for the next resistance targets when it goes on the upside as well. So here I'm looking for support. Let me remove all of it. Here I'm looking for support. If something is falling here, let's say, man, I keep picking up the wrong thing. So here I'm looking for support. If I grab from here to here, I'm looking for next level of support. So 61.8 was broken. Next level of support was 1272. The next one after that was 382. If I want to find the resistance, this would be my resistance points as well. So 50, 61.8, there's a cluster. You probably want to get out here at 390. I mean, no, psychologically, that's a level. Okay, and somebody just posted something here. I don't even know how I can show it. Let me see, maybe here. I'll show it to people here. So the contract 385 calls went from 28 cents to $5 on that run. So you would have converted $28 to $500, and this guy is dirty. So on our full send indicator, he's showing these nuts. Not nice. I'm trying to find the YouTube. Okay. So, and you can replicate this, and this is literally how I would teach my son to trade, and how I talk to him is basically look at the bear flags, look at the lower highs, higher lows. So for instance, we'll start from here. So here you have the lower low, the whole downtrend was down, and all it requires is patience from you guys. Sorry, I just keep shaking here. So I'm connecting the lower highs, and then you see that it has like a little bit of falling wedge here, whatever. And then on the break of this, either here or there, you can take that long. Then you see that we have higher lows right here, and we're kind of connecting these. Well, that does not look right. Let's do it for real. Okay, so now you have a little upward channel. If you break this channel, you can take it on the break of the channel, or you take it on the recent previous low, or this one here. So you have two entries. The break of this, you take it, break of the channel, or break of this one. More risk, less risk, a lot less risk. So that's how you gauge the kind of like your risk level on the taking of these trades. Then you're able to know, hey, which way are you going to go here? Look at this. So we know, you're going to break this level 50, you broke it, you came back for a retest, and then you rejected it really, really hard. So your next, level would be kind of like here, that you're gauging that, and it hits the 1272 perfectly off of this swing low high, and it kind of bounces off of that and continues higher. So to keep going, you have the lower low, you have now equal highs here, and it made a higher high, then it has a lower high. So the next step, what we're waiting for Monday, is you're going to go break this channel. You can take it here, or what's the next point where you want to take it?
Am I allowed to answer?
Answer.
Above 396.
Yeah, above 396. So you're waiting for this previous high right here. You have the 397, and then you had this consolidation zone right here, if you guys, right here. So on the break of this 393, you can play it to 397. I would get out there, and then if it breaks 397, then you have this indecision candle that we are most likely going to come back and revisit at some point here.
I guess I should have identified the candle. It looked like 396 on my screen, but yeah, 397 there, the high of that candle.
And here's the channel that we are in. So we're kind of watching this, right? So this is 30 minutes. Then the same things happen on 10 minutes, right? So here's your bear flag, right? So let me make sure everybody sees it. I think the day opened, into the bear flag. And I kept posting this for you guys here. So here's your bear flag. There's the pull. You guys remember me screaming, we're breaking the bear flag? We made decent money on the 38.50s. This was it, guys. This was the bear flag that I was pretty ecstatic to break. And we had the level of, if you guys recall, the first target was 38.70 on SPX, and between 38.70 and 38.50, and they continued going down all the way to 38.00, 38.10, I believe it hit on SPX, and it came back down. But you guys know, you guys know how to measure this, right? You should be better at measuring this now. So if you're to measure between the pull and this that's 5%. And then if you measure it, from the entry to here, so it really didn't play out yet, the whole bear flag. You're looking somewhere around here. Okay, I'm not going to get it, but here, close enough. So you're talking about 370 to be the next level on SPY, where it's going to complete this bear flag. Okay, so if I go on my 30 minutes, which is my favorite chart for kind of like channels and looking at stuff. So we had the area here. Then you had also this huge indecision candle here that kind of probably instigated this selling here. And now we are hitting that kind of like a zone right here. So most likely a level of rejection will be, if we open on Monday at 391.29, there's a high chance that we kind of hit that and continue down. And then, couple that with what here. What do you guys think happens at this level? Bear flag, trend line, right into the same level. Probably a high setup for shorting right here somewhere to continue down. And then all you would have to do is kind of get out right here. And then if you play this right there, 372 to 370 would be your unloading zone to get out from this entry here at 390. So that's kind of how we play it. So far, so good. And believe it or not, kids are better at this than we are. Because they see the art, they don't see the science and math behind it. So, all you have to do is connect the lows, and we connected the lows, connect the highs, and we did that. Here's your highs. If you connected the highs right here, and you can short it every time it comes to this trend line. And how do you do that? Well, you just have to trust yourself and put a stop loss right above it. And you guys know I care about indecision candles because that tells me that they're offloading at some point. And here they are, set up a trap on here, hit the trend line, came back shorted, hit the trend line the third time, bounced right into that supply zone, shorted again. And then once it broke this, it was pretty much done deal. I think our level was 389.54 on Friday. And then it dumped really hard. And then the same thing, you're dumping down and you're like, man, I want to chase. And most people, they chase and they get kind of eaten alive. You just wait and patiently wait for the bear flag. Here's one bear flag. In this case, it'll be a bear pennant, right? And this will be the pull of it right here. So if you measure this one, and I'm just giving you kind of like a full lesson on the bear flags. If you look at this one, this is 1.51. So if on the break, you play the 1.51 right there, and that's your exit. And look, it kind of worked out almost perfectly here. From
Dude,
this bear flag.
Shorty, you got the measurement exact again.
Yeah. And it just keeps working, guys. And you just have to be patient. There's another bear flag. You play this entry, you offload, you let it consolidate, then you play the bear flag again. And so on. And then you connect the highs. Remember, at some point during the day, I kept saying, switch, switch. And here's your lower highs connected. Here's your lower channel connected. Then you broke it. Then you play again. And I'm kind of giving you here. You break that, you go higher. And then it really just, from 330 and on, it just took off.
Isn't that a bull flag?
It's not really a bull flag. It's just a break of the structure. Bull flags usually occur when you're in a bull pattern, when you're going up. All of these are pretty much, your short squeezes so far. Bull flags only happen. So let me see, let me look at Oxy, for instance. And I'll look at Oxy in a little bit of higher time frame, maybe like 3 hours. So these here would be considered kind of like a bull flags, right? So if you look at this, it has a nice run here, right? It has a nice run, then it consolidates. So here, from here, sorry, I didn't select this. Let me know if it's too small. From here to here, it took a nice run. And then you see, they had to relax, they have to consolidate. And then you see the break of the bull flag. And then if you measure this bull flag, guarantee you it goes up to here. And then it just repeats again. Then you have a longer consolidation. Here you go, and it breaks, and then it goes. And then look at this. You had another one here, and you play it in a quick one. That's why they say take your profits quick. Then there's another one. Then you see the chop zone here at 50s, and it's still kind of consolidating here, right? You guys see there's a lot of levels you can play and scalp, but nothing in terms of major runs yet.
Yep, see it.
Okay. And then you just basically play these guys, and these happen on every time frame. If I go on 1 minute, you can play these on 1 minute. So here's your highest high, here's your lowest high. And look, that is, you break this, you know, this is your previous lower high. If you want to get in there, a little bit risky, but sure. On 1 minute, just play the break of the previous lower highs. Not there. Here, you take that, and then you play the flags, right? Here you go. Play that. Play that. Then here's this one. So here you see how it's trapping, and then it consolidated. So let's say you got in here, you put the stop loss right here, you would have done great. Because you wouldn't know that these wicks are here. It wouldn't be fair for me to tag them. You would just not know. You would know that these are here. These happen afterwards. So if you got in here, your stop loss would be somewhere around here. And then let's say this is your first entry. This would be your final entry, and that would be about 4.5 trade here. And you get in on that, and you made some money. And that's the simplicity what I'm talking about. If every one of you started using, you know, lower highs, higher lows, and look now here. I mean, it looks almost like a bear flag. Look at this. It looks like a rising wedge bear flag. You guys see that? So on Monday, you could most likely play this on the smaller time frames. Play this. You break this, your exit would be 61.5, and you get $1.50 on Oxy. And if you're not happy with that, then you need to reconsider trading for yourself. It's probably not the best thing you should do. And this is my zone that I would look to get out. If this pumps up here, this is even better short because it's going to go all the way to here. So 65. So this is what you're looking. It's either going to go here, and then it's going to connect down, and then this is your reward. You'll put your stop loss here and drive it all the way down. Okay.
What's the level up there, Shorty?
This is about 65, 32. That's something that we would look for on a quick trading scalp to play it. AMD, this is one of our favorites. And same thing, AMD is really good in terms of playing lower highs, higher lows. So if you look at this, let's see where we open, so that way we start from scratch. But it was Friday the 20th. Yeah. Okay, so we open here. And if you're in 5 minutes, I mean, this is your levels. And Drew, I think you remember this play because I think you would have made quite a bit on your account if you stayed in it. This was the high of the day, and this was pretty much the, I think, low of the day. Did not happen till here.
Thanks for rubbing the salt in the wound.
Yeah. So this was your low of the day. This was the high of the day. And look here, we claimed it, we reclaimed it, but your initial balance low, which is different, right? 30-minute orb low is here. Initial balance low was set right here at, what is this? 10:10, like 10 minutes after our orbs came out. And then once it broke it, it never looked back. So if you look at these charts, I mean, look at the bear flags, guys. It's everywhere. Here's one right here. Here's another one. And whenever you have a trending day, this is the easiest money you're going to make. And then you just kept going down. And then if you connected these highs, and look at this. Now, I mean, your first level of entry, if you're playing this, would have been somewhere around here, 91.9, because it honestly had a really, really flat target all the way down. Then it reclaimed this area here. So you see a spike. On a safer buy zone, you want to play the break of this right here. which is 91.16. Once this breaks, you take that long, and $3 on the close, probably not the worst idea you could get, right? $3 on a 0 DT on AMD, they would have printed. Does this make sense what I'm doing? You're just connecting your lower highs and then, your higher lows or lower lows. You're connecting those, and basically you're playing the breaks of previous higher lows or lower highs, and you keep going. It's honestly that easy, but it requires a lot of patience and a lot of waiting instead of jumping and FOMOing into place. So here it looked like a bear flag. Then you look at this, and there it goes. I mean, you're connecting these. This was your connection right here. So look how well that would have worked on a triangle. So here, if you took this trade entry, right, you could have used the previous high here at 90.34, which was riskier. Less risky would be this one right here, which was 91.17. And then you take that long, and your first target, the previous lower high, which would have been 93.60, and it tapped it perfectly. So you grab it at 90, you here or here, and look at your reward. Does everybody understand this?
Yes.
That's a good question, Up. So when I trade, I look for 3 or 5 minutes. I prefer 5 minutes in a choppy market. Does anyone know why? I want to avoid the fake out, right? I want to avoid the fake outs. I do not want to play 1 minute, because 1 minute could, you can scalp, but you have to be quick on profits. A lot of you guys, you want to play 1 minute, but then you want to hold it for a $15 swing. If you're playing 1 minute, then you're playing small increments. No, sorry, my headphones, I had to switch. But if you're playing 1 minute, you have to treat your profits and losses and taking profits in such quick manner that you want to get out. So in 1 minute, on 1 minute here, not 1 minute. There's a consolidation zone here, and look at this. If I'm taking a trade right here, my first target is this previous lower high and this zone right here, and you want to get out of there. So I would have played this from 89.94 all the way to 91. That's pretty good. Right? And then, you break, and look what they do. Typical, what they always do is you broke the zone, and look what they do. They trap you on 1 minute, and most people freak out. And that's why I say on 5 minutes, do they trap you at all? Your stop loss here, target here, and you just keep moving on to your next target. That's why I prefer 5 minutes. And then if you're really, really, risk averse, just switch to Ashi Candles and connect the highs, guys. Just play the freaking triangles. That you can make so much money. You here, connect the highs. And one guy that I mentored one-on-one, I literally told him to use this, but nothing else but this. He's been profitable. He left me. He messages me sometimes, and he's like, dude, I'm still making money. He quit his job. He bought a house. Now he drives a Bentley. And this is all he does. This is the only thing he does, and he basically trusts himself on every one of these setups. And it works. So here, I just want your targets become your bear flag measurements. Here's 422, the break right here. 422, this would be your exit. Okay, so you took this trade right here. So you took it at 92, and you get out at 88. Guys, you will make a lot of money on this trade. I promise to you.
Shorty, can you kind of explain the Ashi candles? Because I'm trying to learn about that.
Yep. So the Ashi candles, so regular candles, they don't consider the previous close and high. So this is a standalone candle. It does not care how the previous candle closed or opened. Zero relevance between the two candles. Do you understand that? Like zero. Independent, independent. Ashi candles, when they calculate it, they take account of the previous open close to calculate the next candle. So basically, it builds on the momentum to see if there's momentum in the candles, because it uses previous candle information to build the next candle start. So that's why, in Ashi candles, you can't see what? Anyone know this answer? You get a book. I'll send you Douglas Trading Zone book tomorrow.
I'm pretty sure I know the answer.
You're not allowed to answer.
I already got a book anyway.
You know, into the open close properly.
There's something else you can't see. It's really, really important you understand this. When you do Ashi candles, you will never see something. If price considers the previous open close, you will not see something really, really important on Ashis. What is it?
Wicks?
Nope. The gaps. There will never be a gap if you
Yeah.
consider the previous open and close. You will never see a gap here on any time frame you do. They're going to be all connected because you're using previous day's candles open and close. So there's no gaps. Even though I for sure know if I switch to here one day on AMD, is there a single gap on Ashis?
Nope.
Anyway, okay, well, let's switch to this. Is there any gaps here? Okay, well, there's a gap here. There's a gap here. There's a gap here, here. Small, and maybe there's a gap here and here. There's a gap here and here. You switch, there's no more gaps because Ashi considers the momentum of the previous candle to determine the candle next. And that's the difference. These are momentum candles. So they tell you, hey, how are we doing? Are we going up or down? And usually when you see like, you know, I like to look at 3-day candles on Ashis because they tell you a true picture on the momentum. Are they dying or are they not? And here you see that they're kind of consolidating, but they're also creating a bear flag on Ashi candles. So this breaks, you know, AMD breaks 88, this is done. It's going to go into 70s. And you can measure that, right? So, you know, here for people that might be like, oh, Shorty just does the post stuff. Okay, well, if this breaks right here, sometimes it's really hard to get the level, so I'll just get the closest I can. Put it like right here. $60 will be the next target on AMD. And if I go to the here, what does this line up here? It lines up with what? And I tell you guys, these levels get what? Every single time will get retested. Major breakout levels get retested. Look at this. This was a major breakout level, and this was a true ascending triangle on it.
Lines up with previous resistance.
It lines up. Yeah, it lines up with the bear flag plots directly to this level at 60 on AMD. So here's your next resistance. If AMD wants to start running, you basically draw it on a bigger scale right here. If it wants to go up, right? So 99 psychological 100. Where did it reject? 103. I think we had that level for some reason. But anyways, if it breaks this level, let's say at 100, then it has a chance to 105 again. But it looks, you know, that it might go down to retest this level here. If it does it now, there's no better opportunity later, right? So, and here's your in-between level where it might bounce. And then how do we confirm this? Does anyone know? What does this say?
Volume profile.
Does this confirm everything that I just explained to you? You break this level, you're going to flush pretty much $15. There comes a flush right here all the way to 57, which would line up perfectly with this flag for us. Okay. So and you know, for people that don't trust yourself, you just have to start believing in yourself because nobody else will. Even if you're using Ashis, you know, Ashis is not the best for price action just because they don't show you the gaps, they don't show you the different stuff, but you can definitely connect these dots and the lines on it because it's much cleaner. You know, some people lose themselves as they're not able to see it. Here, you know, you're definitely able to see it. You have a nice down channel here. You're coming down, you're connecting. The break of this, and then if you want to wait for the previous change of character, here you change the character, went up. Here you have a consolidation, you know, we call it in the Wyckoff accumulation happens. Then it kind of drops here, and look what it's retesting now. Where is it? And what do we do on these levels? What should you do here? Anyone? You want to short it. You want to short it. It broke the previous support. Now it's resistance. You're looking to short this and see where we go. Then, you know, you're connecting your lower highs. If you're not sure it's shorted here, well, then wait. You know, once it breaks this level here, 89.42, you can get in, or 88.55, which is a little bit of a less risk. And then your next target would be 83. So you have $5 drop once it breaks this. Does that make sense? And then upside, if we decide to run, so let's see. Let's connect this. No. Upside, if you break this level right here, which would be 96.63, then you have a high chance that we're going to go all the way to about 100 and then 105 next. And it's pretty much simple as I'm telling you guys, but you have to trust yourself. A lot of you guys are, you know, by the time you question yourself and you're like, should I do it? Should I not do it? We played SPX. Let me bring it up. We played SPX on, I think, what, Friday when we shorted it with 38.50s. You guys remember that? I think Drew, you were in it. You guys were in it. Actually, we shorted it. I think it was right here. We entered a short on it. We entered a short here, and I think some of us got the 38.50s at, I believe, 210, 215. And these contracts, does anyone remember where they went? 38.50s? They went to the high of 44. So it was $210 to about $4,000 that they went. And I taught you guys something. I don't know if you guys remember. How do you measure the triangle where it's going to go? So this is a triangle. How do I know where this is? Once it breaks this, where is it going to go? We know the low of this triangle is the first target, which worked, right? But how do you know if it drops below that, where it's going to go? Anyone?
The next low.
You grab the start of your triangle to the top right here, and these become your targets. The next targets you're going to be playing with. And I mean, it comes very close to 2618. We had a trend line there. It hits it perfectly and kind of bounces off of that. So you had 1272 at 38.76, 38.58, and then, you know, 38.10. I did not have any levels on that, but it bounced right from it. And even though it looked like a bear flag that they were forming, but that was more of a trap. And then they broke this bear pennant to the upside. And they're pushing all the way up to the previous 61.8, 39.10. And I don't know if Dirty Mex is on the call. He actually called me to tell me about his trading day. And I told him when I was talking here that we were headed to 3900s. And that's where we went. When we were around 38.10, they were going to go to 3900s. And kind of went there. But my initial target was based on this imbalance candle right here. You had a small indecision candle followed by imbalance. And what we do, that means that there was a buyer here, a strong buyer, and then he came back and refilled. This is called a trap. They trapped you below, and then basically they reloaded cheaper than initially and went higher. If they loaded here, that would have been, you know, making a higher low compared to this one. This time they made a lower low and they trapped you and they went beyond. This right here is called Liquidity Zone. They knew there's liquidity here, so once they break this, they knew people are going to panic and start selling stuff. And what did people do? As you know, they can predict our moves. They started liquidating their positions and shares and whatnot. And then at one point, if you guys looked at ads, this was the same ad right here, was it not? Same setup. Look what they did to ad. People started liquidating. They started selling even more. So it was fairly obvious what they wanted to do to people and their They did it perfectly. So fib retracements, some dude on Discord. Does anyone want to answer what the fib retracements versus fib extensions are? Yep, so I'll do it. Fib retracements usually means between 0 and 100%. If you're to play fib extensions, it's basically you add the 1272 and 1618 and higher than 100%. So here's your fib extensions, right? So if I wanted to measure this move to here, but from the previous, let's say, higher low, then this would be the targets that I played. So basically it would give me the next set of targets over 100%. Fib retracements are between 0 and 100%. When I play fibs, I just added the 1272 and 1618, therefore I have it all in one. I have a 0 to 100, and then I have the next set of targets as well. So I'm able to play that way. Okay, and Juan Munoz was on there, and you can ask him. I asked him there. Okay. And any questions from anyone? YouTube, Discord, is this making sense? You just have to start trusting yourself on these setups, guys. Like you have to start trusting yourself when you see it. You see a bear flag, connect the lows. There, break that. Then you need to measure, right? If you're not familiar with this, you measure this from top to here. Here's your first target, second target. You get out and call it a day. Yeah, you can use Ashis to mark them. They will be slightly different levels. I use regular candles when I mark them. So let's see, session morning profile. Let me make sure that it's.
And on Ashi's, you just connect the wicks and play the break.
Yep.
Short.
Yep. Same thing. You just attempt, connect the wicks. So here, if you connected these, look at this. You would have, your POCs right there. You break that, you go down, then you have another bear flag. There's another one. There's a bear pennant. You break that POC, you went down. Now you have a VPOC here, right? This would be your, well, this is actually your VPOC for Monday, here. And what do you guys think is going to happen? Like, so remember, when you have two POCs that are together like this, we've covered this. How do you find where you should put the line when you have POC?
You do a range.
Yep, you do the range, and to find where the line goes, you take this POC level, which would be, let's say, 291. This one is 290.54. So what you take that and divide it by 2, what would you get? 290.75. So you would put it somewhere like right here in the middle. Call it a day. Then you do your zone. I have no idea why this one looks different than the rest. And this would be the area, even tomorrow when we open up, I would be looking for rejection on this level right here. Then the next level, we have a fresh POC here, which is also what? It's untested POC, which means it's a VPOC. So this here becomes, these are going to become your magnets for the upside. This is your magnet for the downside. And then you have a little zone around it. You just grab this. We'll drag that guy. And these are your zones for tomorrow, for instance, that we would play the levels on. And you have another VPOC right here at 309, which is very close to 310. So we would get out a little bit sooner than the rest of the crowd. All right. I like the extend right feature. Sometimes that annoys me, but. So these will be the level looking to kind of, if we reclaim this level 290.74, call it 291, and we break this trend line right here. So that would be my, a good level for me to scale out and go into the calls and play it 297. I'm looking at the volume profile. It looks pretty open, right? So there's some congestion around 295, which is to be expected, just a psych number. And then, your next level would be here, which would be 298.41. And if you put a little wrap around it, right? So, and this one's just weird. I'm sorry, I don't know what I did. It gives you that almost the 300 range here, taps it to the 299.22. So this would be the levels I play on Qs tomorrow. And I don't know if they'll be different. Let me see when I switch it. It's a little bit different. You know, they shift here. So 291.14. When you switch from Ashis to regular fins, not a big difference, honestly. So you don't have to switch back and forth. You know, you can learn to adjust it. But this is my play for tomorrow. I'm looking for a rejection first here. If we break this top trend line, then I know we're headed to 300 level. I would get out at 298.5-ish. And let the other crowd believe that we're going to go to 300. And we have a POC at 301.47. And you guys see here that there's a double POC at 299.45. So this level here is going to be deadly. I mean, it's a lot of people are going to be, you know, looking to get out here anyways. But we'll probably play this and get out a little bit sooner than them and not lose much momentum on it. So this would be the area that I'm kind of interested in tomorrow. Okay. Let me see if there's questions on YouTube. You wouldn't be surprised they ran into triangles to Amazon virtually well towards the end of the day. Yep. Can you go over the last fib retracement you did? Yep. Which stock was it? Was it SPY? No, SPX. This one? Yep. So let me see. I'll delete everything here for a second. So on the retracements, what you're trying to do. So here's a nice, you know, swing high, swing low. So if I want to know the next resistance for it, this would be the level that I'm looking for, right? So I'm looking for a rejection at 39.17, and then you guys see here on SPX, even though you know you don't want to trust it too much, SPX does not have shares, so it does not have a correct volume. It's a, you know, aggregation volume off of SPY, which is its derivative. So you don't really rely too much on SPX volume bars here because you guys see there's not much. But you know the 61.8 would be here, and then your 50% lines up perfectly with 39.5, which is your psychological level, right? So this would be my first resistance point on 39.50. If you're gonna play it, you know, a safe bet if it goes over 39.50, that probably will have a chance to go 4,008, and then they will have a POC here at the 40.88. And then if you go on 65 minutes, you'll be able to see a cleaner picture. All right, so you have a nice bear flag here as well. So here's your bear flag if that continues to break, and a lot of resistance here. I mean, this 39, you know, 36, 39.50 is going to be dangerous level for it. Then if it breaks this, let's say 4,000, 4,100 probably comes next. Even though we had, I believe it was 40.74, if I remember. Where is it? The level that it was this one here, 40.67. This was the level that, and it was 40.69. That was 69. Sorry. 40.69 was the level for us to go along previously on SPX. So this kind of reverses the trend. If you're able to break 40.69, there's a high chance that you go to 41.20, which is still your repoc. Now I remember the numbers. And then, you know, you have this level, which is going to be crucial. 4,300 is what level here? Do you guys remember when we talked about it last Sunday? This becomes your, you know, true bulls in control level here. You know, we need to get over to 4,300 if you want the bulls to be somewhat in a control. And I'm using fibs here, as you saw on the smaller swing, right? So this is a tiny little swing that I'm looking for the fibs. The longer the swing that you select, so let's say the time frame I select weekly, and let's say I want to know, you know, from March lows to the highs. Well, my next support is at 35.05 on a 50%, and my 61.8 is 3,200. I can use this fib here to play and day trade, right? Because I mean, they're nowhere in picture, right? So if I wanted to know the support and resistance, I have to use relative time frame to what I'm trading. So like for instance here, this was my, triggers. If I wanted to go long, reclaim of 38.62 according to fibs, you can take long, then you have the 50%, and then, you could figure out where your exits are based on what we covered earlier, but that's how you use fibs in terms of the levels. Let me see this level here. So let's see if you took this one to what you're seeing now, you see the 39.17 becomes really, really important than the 39.50. So these are the ones, the swing high, swing low, that I would care about for now. So this is for you, Ramessa Majid. And, I'm not going to talk about myself, but every Sunday and any opportunity I get, I kind of give you guys the trainings on this. For the people that are not in Discord, if you want to join, you're welcome to join, but we do this. I trade live, and we also have a couple of good traders, in the group. Drew, Catching Rockets. We have Flipper the Goat. We have Earth. We have a couple of other guys that are stepping up and really, really becoming profitable traders just based on the teachings that we've had. And, I don't take all the credit because the credit's on you guys. A lot of you guys are learning, and, here's the profits. Some of the people like Lady Kiki, I remember her when she talked to me, she said that she struggles staying consistent. This is her P&L for the month of, the May 22nd, the week. And you see here for 3 weeks, she really hasn't had a bad day. And you guys think $50 is not a lot? Well, 4 week total, she made $1,000. Then, look up, Fins is here. And if you guys don't want me sharing your names, you can tell me stop and I'll do that. But here's people that using our ideas and how we're trading. Some of them are newer, some of them are older members, and you see, the profits. Most of them usually done for the day. This group, I blew 2 10K accounts. You'll have the ability to learn and trade as long as you commit yourself. He had 3 red days since April. So, and I remember this loss, and I remember his gain here because I talked to him about it. And, when he made this, he made me proud because he was able to not revenge trade, but he traded off of the plan. And he went 5 wins, 0 losses on that day. I remember this, Mr. Bean. So if you're interested to join, welcome to join. People, that are in the group, I think they're getting better slowly. You're not going to learn this trade overnight. If you did, we would not have any professional people in the world. Everybody would be a trader, right? So up to you guys, and hopefully you guys picked up something new. If you didn't, message me if I can help you in any way. If you have questions, I'll never say no, as you guys know. So thank you guys for joining. 11:30 now. Any questions from Discord, YouTube, and anything last minute you guys want to look at? Most likely tonight around 10 p.m. we'll cover a watch list and prepare for tomorrow. The fib extension, same thing, guys. My fib extensions are the same. I only use the 3. I would use only the 2 fib extensions here. Let me see. So here I use 127, 1618, 227, and 2618, wherever that is, right here. These are the fib extensions. 1, 2, 6, 7. These. That's the only ones that I use. Anything over 100% is your fib extensions. Yes, we'll cover Momo in a separate, just because I'm in the trading view and I don't even have Thinkorswim enabled right now, and it would heat up my whole room right now with the PC. Let's cover the Momo tonight, and during the watch list, I'll go over at 10 p.m. how to use the Momo. Okay. All right, guys. Well, I appreciate your time. Thank you guys for joining, and we'll catch you guys tonight at 10 p.m. for the watch list for the week.
All right, thanks, Shorty.
Thank you.
Bye, guys.